Hello, and thanks for joining us. We're here today with Strix PLC, who've had a fantastic set of results. Thank you for joining us, Mark.
Thank you.
You've obviously maintained global market share. You've held gross margins at 40% for the last 3 years. Can you talk me through the three segments for your core kettle business, the regulated, the less regulated, China, and we'll pick up progress on each one. Should we start with the regulated?
No, sure. Regulated market has been very stable over the last 12 months. We actually hold a position of around 61% share, and that's again been very stable. Market itself is growing at about 4% per annum. Really the key growth areas within that market would be the US, had more than 1 million incremental sales during the course of 2018. And surprisingly, actually the UK had quite a strong back end to the year, probably through some stocking for Brexit.
The dreaded B word. Well, let's pick up on the US then, because I know historically you've been very enthusiastic about the tipping point and the progress that we might see there, but we're still penetration at 13%. Why do you think that hasn't picked up a little bit more?
It is growing. The actual market itself is growing in double-digit figures, so sort of between 14-15% per annum. So it is actually quite strong compared with an overall market growth of 7%. It does vary. I mean, actually, the US is still quite an early adopter market. It is moving, as you said, with that tipping point to the sort of the mass production, but it's early stages yet. So we are still seeing very good growth. We have a share of over 70% of the US market, so very well positioned as that continues to grow. One of the growth drivers is sort of the benefits of tea. Tea is now very, very popular in the US, particularly the health benefits of drinking tea, and that is driving the need for electronic kettles, which actually have multiple temperatures, which is sort of the high-end value of the kettle market.
How much does electronic kettles count for in terms of your revenue?
It varies depending on the geographies, but typically it'd be somewhere between 8 and 10% of overall revenues.
If we move on to China then, obviously over there I know you've seen the growth of the healthy eating appliances. Has that impacted your market?
Well, we used to treat the healthy eating appliances as separate to the standard kettles, because these are devices that are used for cooking all sorts of different things, whether it be noodles, whether it be tea, coffees, all sorts of different things. So they were treated quite separately. Actually, they actually use basically a glass vessel, which is on an electronic base to do multiple temperatures, and those controls being used actually infringe our IP. So certainly during the course of 2018, we did actually take some legal action against a number of players in the marketplace, which actually we successfully concluded, and we actually managed to convert those appliances to Strix controls. Although there is actually a bit of a delay because you need to do quite a lot of adjustments to the appliances themselves to change the tooling. So usually there's a 9 to 12 months delay before you actually see the benefits of those coming through into the marketplace.
And are you starting to see now in 2019 those numbers coming through as you expected?
Certainly we've had a very, very strong start to Q1 based on those actions that took place, and we're certainly starting to see that volume increase in 2019.
So ongoing defence of IP is something that's still a priority for the business, but taking up too much resource?
It is absolutely a priority for the business. It's something that we've been doing for a number of years. Actually, 2018, we took 8 initiatives in the marketplace, which is the most we've taken, I think, in the history of the company. It doesn't actually take a lot of resource. We only have a team of around 4 or 5 people, and actually the costs are quite minimal because we're very focused on what we do. IP is sort of just one part. So actually, in the course of 2018, we did a number of different activities ranging from legal cases on IP, which is perhaps the more traditional route. We've done things like factory raids where we've actually stopped production and actually made sure that the products aren't infringing. We've done a lot of copyright actions where even when the IP has run out, for an example, an immerse kettle, IP ran out in 2005, so been gone for a long time. We still sell around 10 million controls to the immerse market, and we managed to take a successful case to stop people doing a direct copy of those immerse controls.
Okay, so having the IP in place is not integral for you continuing to dominate your marketplace?
No, definitely not. I think, we always look for IP at the start of a project development, and in most cases we wouldn't do that project development if there wasn't some IP, and it's very important in the first sort of 1 to 5 years as you sort of establish your market position. once you're established, actually, there's lots of other mechanisms you can use to protect your controls. We use a variety, as we've just described, but actually safety is also very important for us. We do a lot of safety actions in the marketplace. We'll buy kettles, we'll test them in our own accredited laboratory. We'll prove that they actually don't meet the regulations, and then we'll work with the local authorities to have those removed or changed over a period of time. And that's much quicker than IP actions, and it can be very effective.
And then you get the bonus of hopefully switching them over to your controls and the consequent revenue from that.
Yeah, I think, particularly with the IP cases, in all cases, we look to try and build a relationship with the person where we're taking action, which seems a little bit strange, but it's been very successful for us. So normally when we're actually trying to conclude a case, we'll always look to try and get a 3-year supply of that infringing product going forward. And that 3 years gives us time to work with that particular brand so that we can actually demonstrate the benefits that we can provide. And as I say, been very successful in the history of the company.
Moving on then to less regulated markets, how important has the U9 control been in growing yourself from that sort of 20% base, and how important will the new VNQ that you're going to be launching be in terms of pushing further into those less regulated markets?
The U9 series has been a very positive addition to the range of products, and that's allowed us to compete much more aggressively in those markets. And we have a modular range, so we have specific projects or specific products for the unregulated markets. The V&Q actually is a slightly different product. It is a lower cost control even still, and it will allow us to compete head on with the China competitors. And that really is one of the key focuses we have for the growth of share in that less regulated market.
Okay, and then so pushing back against those Chinese competitors, is that going to, a great position to be able to put yourself in, and also, more importantly, to stop them growing and gaining a better foothold in the market?
Yeah, we've spent a lot of time and energy on automation within our factory to really try and drive down our costs. We are really trying to maintain our share or grow our share in the less regulated markets, and that's for 2 reasons. One, as a business, we're very focused on absolute profit, and obviously incremental volume is very good for that. Mm-hmm. Secondly, we really want to make sure that we can prevent the growth of the China competition in particular. And we can do that by actually taking significant share in that less regulated market.
Excellent. If we move on then to filtration, Aqua Optima, I know you've had a strong year in the UK and you've got nice 25% market share, but it's probably the Halo Source acquisition that interests people the most. Was once £100 million business, you picked it up for £1 million, which strikes me as a phenomenal deal. You must be pretty pleased.
No, very pleased, and we're actually very excited about that acquisition. Halo Source has a couple of different technologies. For us, it's an adjacent technology to our existing Aqua Optima products, and there's a couple of things that are important. First of all, it has 2 key technologies within Halo Source. One is in the USA, which is actually for the removal of lead from drinking water, which has been a huge issue in many of the states of the USA. The second is a brand called Halo Pure, which is based over in China, and we've actually acquired a Shanghai operation for the Halo Pure brand, and that really is taking both bacteria and viruses out of water. So again, a very important technology. In addition to that, there is a significant amount of engineering resource in the USA in terms of the skills that are available, and so the US will now become our innovation centre for the filtration division within Strix, and that's a very important part of our future growth for filtration. The Aqua Optima business will also benefit, because what we will now do is lean on some of those technologies and some of that engineering to further differentiate our Aqua Optima brand. Sorry.
Okay, well, that's a nice segue into new products and what we can look forward to seeing over the next 12 months. What have you got bubbling away?
Well, one of the things we've done since we actually listed is we've put a lot more investment in our engineering team. So we've seen quite a lot of growth of resources on the Isle of Man. And certainly we've seen about a 10% growth in terms of the engineering, both in research and development and also on the innovation side of our business. And that's key to the future, of course. A couple of those areas, we have very strong patented technology, particularly around instant flow heating. So what you will see going forward is a lot of work around water dispensers and instant flow technology, where we are looking at true boiled water, but giving the users a lot more functionality within those units, ranging from variable temperatures to pure water to boiled water. In addition to that, we're also looking at things like steam technology, again, one of our core competencies and an area where we have some quite strong patents for the future.
And will we see products launched this financial year?
During the course of this financial year, there's a couple of projects, so we're starting to see that investment. It does take quite a long time to actually pull that through. We tend to work very much on the technologies, and then we use our relationship with the brands and the OEMs to bring those to market. So it's sort of a three-way party, which can take some time to actually get to the marketplace. But certainly you'll see some in the coffee applications, some in the water dispense applications. But yeah, during the course of the next 2 years, you'll see a lot more activity in those areas.
Okay. Just finally for you, I know there's been some discussion over, obviously a big hit this year on the share-based payments. A compensation scheme that was put in place, the IPO. Could you just tell us a little bit more about why that was put in place?
Sure.
And the terms around it?
Yeah, there was quite a big change for us going from our private equity ownership into the IPO, and at the time of that transfer, actually none of the management team actually had any equity in the company. So there was a lot of discussion with the investors at the time of the IPO or prior to the IPO, really trying to make sure the interests of the management team and those of our shareholders were aligned. So it was agreed that we would put in a share-based scheme with some conditions in terms of our EPS targets over a 3-year period, as well as an underpin of TSR to make sure we hit our targets. But actually we went a bit further in terms of the rewards within the business, and we have actually put in a scheme that was widely distributed to all salaried staff in the business to make sure that all of our colleagues are actually aligned to the strategy of the business.
I think we can all support that as shareholders.
Thank you.
Thank you, Mark. Thanks for joining us, Raudres. It's been a fantastic year with great cash generation. You must be really pleased. Do you want to talk us through, let's start with revenue.
Yes, we have a very good year. Revenue growth was 2.7% year over year, supported by strong Aqua Optima growth of volume of 30% and the kettle control growth of 8%. However, on a constant currency basis, we actually recorded a 4.5% growth.
What about overheads? How have they been impacted?
Well, yes, that's a good question. Overhead, in this last year, since IPO this last year, we have to incur the whole full year of IPO-related fees. And versus the year before, it was only 5 months. But despite of that, we managed to still achieve a flat overhead cost year over year. And that along the same line of supporting fairly high growth top line.
Okay. Profit before tax, obviously that's seen a attractive uplift.
Yes, 3.2% uplift on an adjusted PBT basis. However, the interest, again, it was recorded only for 5 months the year before an IPO, and then this last year was a full year of interest being recorded. So if we take a like-to-like comparison, the PBT on adjusted basis should have been, we should have seen a 7.4% increase.
Okay. Net debt, obviously, strong cash generation has allowed you to pay that down to the tune of 40%. Fantastic. Are we going to see further progression on that front?
Well, yes. We have very strong cash generation ability. So again, cash conversion is at 90% at year end. And that, as you said, allowed us to pay down our net debt substantially to 25.9 million, which is a multiple of 0.8. And from on IPO time, it was 1.7 times. That was quite a substantial reduction there.
Of course, the rest of the cash can come to shareholders. So dividends, you're 7p for the full year?
Yes, 7p for the full year, as we committed. 4.7p will be the final final dividend to be paid and will be proposed. That's what the board proposed. And that's followed the 2.3p that was paid out last year in interim.
Now, obviously, probably one of the big numbers that's going to stick out to those who are reviewing your results is the 20 million that it's going to cost you to move into a new factory facility. Can you talk us through the logic between choosing to buy a new site in China versus to lease, and what the cash differences are there?
Right. Well, the land and factory acquisition project is actually very exciting for us. it actually provides critical long-term economic benefits to the shareholders and to the company. Right now, our current lease will expire in August of 2021, and in fact, we are running out of capacity. So we would need to move anyway. And the current lease is of a 10 years tenure, and it actually protected us from the market increase. The current lease only increases every year by very minimal amount, but versus the market increase of, it was like more than double in the market rate.
Right.
So if we were to stay in the same current facility in 2021, our rent would have doubled. And but that's not good enough because we still need space. And if we were to acquire more space, we were to move out, then the operating cost of the rental would have been tripled. So we looked right now when we assess in 3 years out, that could be anywhere from 1.4, 1.5 million pounds. And that's it's going to be something that we don't want to see happening. So the acquisition or the construction itself makes a lot of economic sense. And in parallel, with the increased capacity, that would allow us to insource a lot of the products that we weren't able to do now. That includes some of the Aqua Optima products as well as some of the subcomponents. And not to mention the Shanghai Hello Source facility as well. We could also achieve synergy by combining all the production together.
So what would the payback be? How long are we going to expect this the factory to have paid itself back?
The payback, as per the current data that we can see right now on a discounted cash flow basis, it takes about 8 years.
And is that including the synergies that come from insourcing?
No, that hasn't included that yet.
So could be shorter as well.
Yes, yes.
Fantastic. And you're still close to your OEM base?
That's a good question. Yes, right now our current facilities is located in the Guangdong province, and the new city where we're going to is only about 22 kilometers away. So we don't have to incur any redundancy cost at all to the current staff, and that's a huge savings there to begin with. Mm-hmm. And it's also a 50 years land use, the right of use. Versus the initial announcement that we announced last year was 20 years. So the Chinese government actually has given us pretty good preferential treatment.
Fantastic. I'm not worrying about the next 50 years, but it's good to know that you're safe and sorted. Just in terms of then the debt, I understand you're going to pay most of it out of free cash flow, but will it have any impact on the net debt ratio?
Well, we have very strong cash generation ability. So to the extent possible, we may have to use our facility as well, but anyhow, we don't anticipate that go beyond the 1x multiple.
Fine, excellent. Okay. Halo Source. Obviously, we've already touched on what a great acquisition it was. But what are the financial implications from the acquisition, and when do you expect it to become cash flow positive?
Yeah, Hello Source is a very exciting acquisition for us. It really helped us to support Aqua Optima water filtration business growth and give us a foothold into the US market. So we paid £1 million roughly in the acquisition itself. And in this year, we plan to invest another £2 million to jumpstart the project. And we do expect it to turn around towards next year and become earnings enhancing in 2021.
Excellent. Okay. Should we touch on lastly then on Capex? Again, with Mark touched on the wide range of exciting new product developments you've got open to you. What can investors look for in terms of future spend on Capex?
We've been, as a norm, it's always been around 6% of our operating Capex as we continue to drive automation, and that's is roughly a number we still stick to. And but obviously next year, or actually this year and next year, we'll have to invest in the land and factory acquisition. So that's roughly 20 million altogether. Okay, but in terms of Capex, that runs at 6%? Yes. Lovely. Well, thank you very much, Raudres. You're welcome. Thank you.
Just looking to the outlook then, Mark, 3 to 5 years, you've obviously got an excellent business in the kettle controls, but alongside that you're working hard to develop new products now that you're unshackled from private equity. What does the 5-year vision look like, and where can we expect the business to go?
I think the kettle part of our business has been amazing, and yeah, obviously we're going to keep focus on that business. Historically, that's been 90% of our revenues. Certainly over the next 3 to 5 years, we'd look to change that so that the other products, which would be the filtration part and the new technologies, would represent around 25% of the overall revenues. I mean, that's certainly our objective. We have a lot of investment within the business, so we've invested already, as we've said, in the engineering side of the business. And I do think we've got some very good technologies, both standard technologies and some disruptive technologies we intend to bring in over the next 3 to 5 years to achieve that 25% of revenue.
Fantastic. Well, we'll look forward to the next update in 6 months' time. And if people want to see forecasts, you can find them on our website at equitydevelopment.co.uk. Thank you.